Hello, today we are going to be looking at how to grow a smaller account. The truth is, when it comes to trading, you can grow any account. You can trade with any account, only if you can catch a zero drawdown. If you can master the art of trading without any drawdowns, then you're good. Now, in today's episode, we are going to be looking at how to trade and grow a smaller account by mastering how to catch zero drawdown. Now, entry point is vital in trading. When it comes to trading, your entry point is a key. Trading is more like a career. Trading is a skill. Once you learn the skill, you'll be good. That's why you see big traders making more money every day. Why? Because they have mastered the art. It's a skill. They've developed the skill so they can trade any day, anywhere, anyhow. So once you are able to master this art of catching zero drawdown in every of your trade, even if it's $1, you can grow that money. So, but the thing is, have you mastered the art of catching a zero drawdown? Now, let's look at some of the things you can begin to do in order to master the art of zero drawdown. Now, I'm starting a series, and this series is going to last for some time in training you and educating you and equipping you on how to master and catch a zero drawdown in every of your trade. Now, I want you to engage yourself, follow me on this journey, because at the long run, you are going to be profitable and you will be happy you did. So, first thing first, trading is not a get quick scheme, but trading is a skill. Just like you learn anything, just like you learn how to do makeup, or you learn how to repair ACs, or any skill at all. That is how trading is. It's a skill, but the thing is that most people don't want to follow the process. In every skill, for you to become a master in that skill, you must follow a process. I have this quote that says that if you stay long in any venture, you will become a master in that venture over time. So if you want to become profitable, if you want to become a profitable trader, you need to stay in this trade. Don't stop jumping up and down. Stop jumping around. Stay. Master this one art. Once you master this art, it may take time, but it will worth it. Trading is all about patience. It requires lots and lots of patience, but at the long run, you will enjoy. Just give it time. Give it time like 6 months, 1 year before you can start placing trade. 6 months of intensive learning. I'm telling you, after 6 months, you'll be good. 6 months of intensive. When I say intensive, I mean intensive. Intensive means that every day you're on it. Every day you're learning. Every day, no day exceptional. Every day you're learning from morning till night. I remember when I started, oh my goodness. It took sleep away from me because I was learning day and night. Day and night, I mean it, day and night, every day. And that was what brought about the results that I started having, because I put my best, I put my time, my energy, my emotions, my attention to it. And I tell you, Holy Ghost crowned it by making it easy for me to learn. And that's why I've decided to share some of these things that the Holy Ghost has taught me over time on how to trade. So if you're watching this video, if you're subscribed, and you're a member of my channel, I'm telling you, you're going to be profitable. If you follow every instructions and guidelines, you will do so well. Now, let's begin. The topic says how to grow any account. But first, you have to master how to catch zero drawdowns. Drawdowns are what makes people to lose money, lose accounts, and they become frustrated. Now, let's take a look at this example. This is Euro USD 15 minutes time frame. Now, I will begin, it's always good to look at the higher time frame before starting to trade daily and 4 hours. So, when you look at this chart, you see that there's a pattern here. In doing your analysis, you go to higher time frame. I like using, this is a double bottom, and we are looking to buy. We are looking to buy. So what are you going to do? Of course, when you have a double bottom, the first thing you do is you measure. Okay, now I'm going to remove everything that I have on the chart so that I can have a clear chart for us to work with. So I'm removing everything. Let's start from the beginning. So this is daily time frame. We are looking at this pattern. We are working with this double bottom. So the first thing you are going to do is to measure and mark so that you can be able to get a perfect entry. So what do? I come here. So I place my line here and I place my line at the neckline. This is my neckline. This is the neckline. The neckline means where the highest point before it reverse. That's the neckline. So the next thing I'm going to do is that I'm going to measure half. That will give us guide on how to. So this is my half. I can do that again. Okay, so like so. This is my half, right? So I'm looking at to trade to buy up until this half. So what do I do? What am I going to do? I'm not just going to enter this trade. Remember, you have a small account. If you have a big account, you can as well enter this trade straight and no problem. But because you have a small account, let's say you have something like $1. Let me go as small as $1. So what do? You're going to scale down to 15 minutes. So from this daily, I'm just going straight to 15 minutes. 15 minutes time frame. So when I get there, I will look at what is happening. What is happening right now? You see that there's the market is buying. It's buying. So what are you going to do? You're not just going to buy because it's buying. Because if you buy, it can start selling as soon as you buy, and that can wipe your money away. So you look at this red candle in the middle. Anyone who has bought maybe when the market was here, you bought, now it started selling, it can wipe away your money and take away your money. We are looking at catching a zero drawdown, meaning that if you buy, it's gonna buy. Not that it will sell before you start buying. If you buy, it's gonna buy. So once you come and you see the market is at this level, this is a resistance zone, is at this level. So what are you going to do? You're going to go down to 1 minute time frame. You're going to go to what is the current market. The current market. You see, if you had bought, you see that it's actually selling. It can take away your money. So what you're going to do now is that you're going to wait for chalk. You're going to look for chalk. Chalk is change of character. Once there's a change of character, you're good to enter. So what is happening here? You see that there's no chalk yet. There's no chalk. But if we broke, you see what is happening. If you had bought, you would have started losing your money. We are talking of catching zero drawdown. So it broke this level. See, it broke this level, but it hasn't taken it out. It's only when it takes it out and retrace back, that's when we can buy. So now we see that it broke this level and and it hasn't taken it out. See clearly, it hasn't taken it out. So we have to wait for it to take it out, retrace back, and then that's when we are sure this market is going to actually start buying. So, but let's look at what happened previously. That will give you an idea of what I'm talking about, why we're waiting for this one to play out. Before you start, our bias is buy, right? We are looking to buy. So what are you going to do? Of course, you're going to mark your zones. This is the zone. This is the zone. So this is a zone. So this is a zone. Take for instance, I'm just trying to give you example of how you can analyze and catch a zero drawdown. Oh, sorry, because I'm okay. So what are you going to do? What are you looking at? This is a zone. So after it has sold and sold and sold, whenever it comes back to this zone, that is when you will enter your buy again. So see that it came back on the zone, on this level. It broke the zone. You first of all wait for it to break the zone and come back to that zone before you enter. It broke this zone and came back. Once it tap on the zone, that's your entry point. So once it tap here, and then you look at the candlestick formation. What do you have here? You have a bullish engulfing pattern. Look at this bullish engulfing pattern. It engulfed the red one, telling you, signaling that it's going to buy. So when you enter the buy, look at what it was doing. It was going up and down, going up and down, going up and down, going up and down until it was going up and down. As it's going up and down, of course, you know, if you're trading, take for instance, $1, you're not going to open more than one position. You're going to just stick to one position. You're looking at growing that money. You're not just looking at becoming a millionaire with $1. You're looking at growing that money. And that will happen over time. It's not going to happen overnight. So that is where patience comes in. So as it was going up and down, going, because there's always a constant fight between the bears and bull. So there will always be up and down, buying and selling, happening simultaneously, happening at the same time. So because you're sure of your analysis, you're sure it's going to buy. Remember, we did our analysis from daily time frame that gave us double bottom. So and we are looking at buying up until half before we can now decide, before we can now know whether we are going to buy up to neckline, because market will always do whatever it likes. So if whatever the market does, will follow. So you don't just follow blindly, you follow by paying attention and by seeing what is going on. So you see that it started going up, and it started buying. A buy, say, you leave it at that. So once it gets to a certain level, so once it leaves, gets to a certain level, like this level right now, you break even. You bring your stop loss to your entry point. So in that way, you're sure you're not going to lose any money. Even if this market decides to come down or go the opposite direction, your money is safe. So you leave it, even if it takes like days before you can achieve your targets. There's no problem, nothing spoiled, but you have to be monitoring it. So what do? You see that I started buying, selling, and that's it. That's it. And once it gets to, you will leave it until it gets to your final take profit, which is this half. This half is your final take profit. And that can give you $5. It can give you $10. It can give you $10. Remember, we are trading with just $1. And of course, you know this will not happen in one day. It can happen in 3 days. It can happen in 1 week. But the most important thing is that you achieved your target, and that is consistency. If you can be doing it like that every month, let's say you trade with $1 every month, you know, within a month or within a week, you have multiplied it. And if you do that for 3 consecutive months, have you not made, let's even say, at worst or at least you have made $30? And that's good. That's profitable. Which means that from that $30, you can decide to add one more position or two more positions to the one positions you are doing and repeat the same thing. Before you know it, you have grown your account from $1 to $100. And from that $100, then you can now start opening more positions, and from $100, you can multiply it to $1,000. Easy peasy, easy peasy. So that's it, trader. In my next episode, I am going to do a more detailing video, and like I said, it's a series. So we're going to be doing this until you master every strategy and every techniques and tactics. That's it, trader. Don't forget to share, like, subscribe if you've not subscribed, and do send us a comment. Do have a wonderful day. Bye for now.